Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Happy Wednesday, everybody. Today's episode is being filmed on location. I'm on a business trip at the moment, and I'm not in the office, so there is a bit of an echo in the background. My apologies in advance if this is distracting. With that said, let's move into the episode, and we begin with 3 updates related to the Chinese economy. According to new data published by the central bank, in January, the People's Bank of China bought 390,000 troy ounces of gold, an increase of just over 0.5% month on month. This is the 16th straight month of gold purchases and takes total holdings to 72.58 million troy ounces, a record high for the country. Central banks bought over 1,000 tons of gold last year, just shy of the all-time high of 2022, according to the World Gold Council, which also expects record buying by countries, including China, this year. Interestingly, it was not just the central bank buying gold either. Regular people are buying too. Consumers in China have been stocking up on coins, bars, and jewelry, despite the high prices. This is a sign that regular households want to protect their wealth against turmoil in the country's stock market and property sector. Bernard Dada, a commodity analyst at NetEx, observed on the trend, quote, "The gold market hasn't been driven by Western investors. China so far this year and through last year has been the engine behind gold prices." End quote. Gold prices in US dollars are up 13% year on year. Next up, in an exclusive, UK-based Reuters reports that Chinese Premier Li Qiang does not intend to hold a meeting with visiting foreign CEOs at the upcoming China Development Forum in late March. Quote, raising concerns about Beijing's commitment to attract investment from abroad at a time of souring sentiment. End quote. Organized annually by Beijing since the year 2000, the outlet explains that the high-level forum traditionally serves as an opportunity for global CEOs and Chinese policymakers to meet to discuss foreign investment. A key element of the event each year has been a meeting between the Chinese premier and visiting CEOs for them to exchange questions and views. If this reporting from Reuters is correct, it has commentators scratching their heads over the mixed messages. Quote, Li attended a lunch with heads of multinational companies in Davos in January, and he met a couple of weeks ago with a delegation from the US Chamber of Commerce. Why just 2 months later would he not meet with top CEOs, especially when the leadership says that they are trying hard to make the PRC more welcoming for foreign businesses and investors? Does he not want to hear what they may ask him? End quote. And finally, for the economy, has China's stock market turned around? Regular viewers will remember that heading into the Chinese Lunar New Year period, the country's stock market had collapsed with $8 trillion of value lost since its 2021 high. Beijing prioritized stopping the bleeding in time for the New Year holiday, pouring state money into indexes. Since that low, a number of benchmarks have now surged, in some cases over 20%. The CSI 300 index of mainland shares has gained about 13% since a 5-year low reached on the 2nd of February. Hong Kong's Hang Seng Index rallied on Tuesday, jumping 3.1%, with the market benchmark rising to its highest level in 3 months. Chinese property stocks jumped on Tuesday on expectations that Beijing will ramp up funding support to rescue the bigger players in the troubled housing sector. We covered some of this, especially around the major developer Wangke in yesterday's video. So, has the world's worst performing major stock market turned things around? Or is this another false dawn like we saw last year? Quote, it has been rare to see China's market sustain a rally for weeks since the second half of last year. Most Chinese tech and renewable companies have been focusing on cost-cutting and improving efficiency. We've seen improvements in margins and decent top-line growth. End quote. US outlet Bloomberg analysts writes that the upswing shows investors are coming to terms with China's attempts to restructure its economy, with some betting that Xi Jinping's attempts to drive high-tech growth and end the property crisis will start to bear fruit. Quote, a steady stream of policy support, from a cut to the mortgage reference rate to more liquidity and crackdown on quants, is stacking up, even though some investors decry the lack of a big bang stimulus. End quote. With such a low price point, some analysts are arguing that now is an attractive time for investors. Quote, I think upping your allocation to China probably makes sense now. China could be one of the best performing equity markets as a trade over the next 12 to 18 months. end quote. However, with fiscal issues, an ongoing property crisis, deflationary conditions, and a challenging international environment, especially with the United States in an election year, many institutional investors are remaining cautious and not pouring back into Chinese equities so soon. Quote, stabilizing a stock market is different from a new V-shaped bull market recovery. Breaking above the previous high watermark is a completely different issue. Japan bottomed for 30 years and stayed L-shaped for that long as well. End quote. So, what are your thoughts? Is China entering a new run, or is this a false turnaround or long-term stagnant bottom? Let me know in the comments below. Next up, China's fiery online nationalist culture war heats up. But just quickly, if you enjoyed today's episode of China Update, I have a huge favor to ask. That is to like and subscribe. It's just 2 quick clicks of the mouse, but it's a huge help for me, and it's the only way in which this channel, independent, grounded reportage on China, can grow. And for those who want to help keep the channel financially sustainable, Patreon and Buy Me a Coffee links are in the description below. I rely primarily on regular subscriber support to keep going. Thank you so much, everybody, for the ongoing support. Next up, nationalist crusades online is nothing new in China, though some argue that such episodes have become more feverish in recent years. A few particularly outlandish examples have emerged in recent days. To end today's video, we will look at 2 examples, one anti-intellectual and one anti-business or anti-capitalist, to get a feel for the current online nationalist culture wars. The US-based China Media Project reports on the first case, writing that one of China's most celebrated modern authors, the Nobel Prize-winning writer Mo Yan, has irked extreme nationalist bloggers on the internet, one of whom filed a court order last month to remove Mr. Yan's books from circulation and force him to pay 1.5 billion RMB in damages to the Chinese people and, quote, stop infringing on heroes and martyrs, end quote, in his fiction. The blogger's 4-page indictment, writes the outlet, lists Mo Yan's supposed offences, including portraying members of the 8th Army during the Second Sino-Japanese War as sexually abusive, and, quote, beautifying Japanese soldiers, end quote, insulting Mao Zedong and saying that the Chinese people have, quote, no truth and no common sense, end quote. This nationalist attack on such an important cultural figure sparked heated online debate. Lao Dongyan, a professor at Tsinghua University's School of Law, called such attacks ignorant, saying that they showed that, quote, an anti-intellectual culture has spread, reminiscent of the Khmer Rouge, end quote. The post was later deleted. Interestingly, this episode has even split nationalists themselves. Hu Xijin, the outspoken former editor-in-chief of nationalist outlet The Global Times, called the lawsuit a populist act representing a very alarming trend in online public opinion that had negatively affected society, adding that Beijing must resolutely stop the spread and development of extremist forces in our society. In the second recent case, China bottled water giant Nongfu Spring has come under fire from nationalists too. Japanese media outlet Nikkei Asia reports that the water company's Hong Kong shares plunged for 3 consecutive days this week, wiping off around 30 billion yuan, $4 billion in market cap, as internet users heaped criticism on the company for, including other things, being pro-Japan. Nongfu Spring is a fully Chinese-owned and run company and China's most consumed supplier of water. So why is it being attacked as being unpatriotic? Hong Kong-based South China Morning Post reports that the company, helmed by China's wealthiest individual, Zhong Shanshan, has fallen under a wave of criticism for the perceived Japanese styling of its packaging, just days after it came under fire for Zhong's competition with another water brand, as well as his son's American citizenship. We note as an aside, it's quite telling of the environmental situation in China that the country's wealthiest person sells water to its citizens. Angry consumers initiated a boycott of Nongfu Spring's products after rumors spread that the company was using pictures of Japanese religious buildings on its packaging, though the company said last week that the designs are artistic creations based on a Chinese temple. The South China Morning Post explains, quote, the controversy reached a fever pitch as online content creators began to post videos of themselves pouring Nongfu Spring water into toilets, and 2 7-Eleven convenience stores in Jiangsu province pledged in a statement last Friday not to sell any of the company's products, calling it a business that reveres Japan, end quote. Hu Xijin once again facing off against the very flame which he in part helped fan over the last decade or so, in a Monday post called for netizens to become more tolerant of private enterprises and pay attention to their contributions to the nation's economy. Regular viewers will remember the nationalist backlash against Messi for a perceived slight in Hong Kong. But from these episodes here, we can see that these nationalist controversies can also happen within China itself. Older Chinese with long memories may view these developments we just covered with a degree of disquietude. There are distinct echoes of the systems that underpin the cruelty of the Cultural Revolution in these stories of grassroots fanatics adopting the messaging of the Central Party leadership to punish prominent intellectuals and businessmen. Okay, that is today's episode of China Update. Thank you so much everybody for watching. Have a good Wednesday, and I will see you all tomorrow.